Let's check on the futures for Monday night. We'll start as always with the S&P, the ES here, the E-mini. So this is Monday. We had a session yesterday, even though the US markets were closed. And we can see that we have been making lower highs. And we do have some higher lows. We do have a very visible ledge at 48.14, 48.13.14. And that is an opportunity for the bulls. Obviously, it is a problem, and but it would also be the opportunity. The opportunity would be to get 9 to 11 points out of it, and then you would have a taller order to beat the prior fails at 48.24. So that's the catalyst, and the higher end would be I don't know if overnight we're going to be able to make those higher highs. Looking down would be the bounce that just happened before I started making this video. 47.97 needs to hold, otherwise you're going to test probably and fail 47.91. So it would be an interesting short going back into this cluster. That would be a trade I would be looking for. I would imagine that the curl can happen once you hit the sellers here, and what you want to be is short into this opportunity here to retest these two lines. That is an opportunity, provided the bulls are not able to take out 48.14. That might be a good place to stop from a levels perspective. That is on the S&P. Let's look at the NASDAQ. Similar drop recently. Whatever happened after hours, we're down 0.3%. And before in the evening session, I should say. 16,940 matters right there. And versus the ginger support at 16,868. And if you lose 868, you're probably going to test the lower batch of bounces, which is at 16,810 or lower. Here too, I would be looking to short into strength. So fade rallies into potential this. The ideal goal would be just from point A to point B. That's the easy goal, I should say. The ideal goal would be to ride it all the way down with runners. Here, as far as getting out of trouble for the bulls, would be to take out 16,981. Moving on to the small caps who are struggling. If you haven't seen the weekly video, you should go check it out. It was 4.5 minutes. It's worth it. We have a lot of fails, and they're pretty sharp. And these are the same time frames, 15-minute time frames. And you can see massive fail, fail, fail. And now the fail levels are getting lower and lower. And you're testing one basically floorboard. As soon as we lose, if we lose 1938, they're going to take another leg lower. And more importantly, solidify this weakness in the small caps. So I definitely would not be looking up in the small caps in the overnight session. These are tall columns to beat. So that is pretty good weakness there. So the YM would be the last. That's the Dow. The Dow was the strongest is the strongest overall as an index. So let's see if the futures show that. You can see there's a lot of bounces. So it does have the best support, even though it is the highest on the 15-minute. And it also has a lot of fails. So this is where I think a lot of action needs to happen, especially over a couple of days. So overnight, I'm not sure I'm going to play this at all if it was me, because these are pretty strong buyers and very strong sellers. I'm not sure I have any indications where I would need to short rallies or buy dips. So I would sit this one out. And the crude oil is, the opportunity is beating 73. It looks like an inverse head and shoulders. That is setting up. So I'm not sure if there is something going on in the rhetoric as far as wars in the Middle East or skirmishes, but something like this. This is an inverse head and shoulders right there around 73. You break that out, you might be able to take a couple of, maybe $1 higher, 80 cents, versus a good solid bounce level. And whenever something is good and solid, if it goes away, it becomes a trap door. So I would anticipate buyers into 71, 71.2. And if they fail, then you have the opposite scenario, which will take you down to 69.6. Pretty good battle here. It looks like the higher lows are attacking massive fails. So maybe, let me suggest that this rally right here was bad for the bulls, because the breakout line was at 73.2, and now they placed it at 75.2 because of one major spike. So that's probably in the face. That's why I wouldn't try to ride it too high because of this massive fail before. So anything above 73.8 I think would be exaggerated. So be careful with that. Let's look at gold, and we'll call it quits after that one. Gold futures. All right. So they did have a surprising end of the week. Out of nowhere came this rally, and it took pretty tough fail, and it's matching another fail. So if I zoom out, this wouldn't be a place to start longs just because of all these overhead supply, all these boxes. This was a battle from not too long ago. So I would imagine there are some willing sellers up here. So it's one thing to come up to here. I think it's going to be something else coming up through here. A fade into the base would make sense. If you can make money off of a little fade down to here, that would be it. Or wait for this to go along from here to here. I'm not sure how we would. I think the fade is the only play on this one.